What a stage. So thank you, Corinna and Max, for having me. As you can hear by my voice, 2022 was rough for FinTech. That FinTech is on a diet you can't see, unfortunately. But it was exciting as well from 2022, right? So personal learning curve was clearly there. Today I want to talk to you a little bit more about the good things to happen in FinTech European ecosystem. Because you heard a lot about the bad things that happened in 2022. It was tough for many companies. Their existence seared. There was no funding. Suddenly you could not raise without revenue 100 million plus valuation. Suddenly there was no one giving you money, and someone clearly started questioning why it needs the 20th buy now, pay later provider. 2022 was also the come to Jesus moment for a lot of FinTech companies. We saw not enough consolidation in my view. We saw only a few. You clearly saw Penta, Conto, a company we have been involved with, probably one of the most relevant exits. But also you saw what happened to Pair Finance, that finally a private equity company came into the market. And then we saw some small acquisitions, some acquisition which actually didn't come true. Like, I don't know if you heard about FinApi just lately, a transaction that was already signed but not closed, big difference in these days. And this was a high learning curve. I grew up in a world where if you have a term sheet, it's a done deal. 2022 was a world where term sheets were pulled. 80 million term sheets from reputable investors were pulled. It was a term sheet, it was a time where signing does not mean closing. And many people also used it as an excuse that BaFin was too slow to process and so pulled out of the deal. But 2022 was also the come to Jesus moment for many ESOP and VSOP holders. Many people who already were millionaires on paper realized they're not so much millionaires in reality. Even so in the crypto world. You actually see defaulting VC investors. So on the LP base, a lot of the crypto millionaires could not invest anymore and the funds could not have the capital calls committed. But we will see more of that in 2023 because still too many companies with not sustainable business model have either money or the investors could not afford another loss in their portfolio. So we will see more failing stars. And you will see it throughout complete Europe. So I told you I want to talk about the positive things. Okay, I missed this the first 3 minutes. But now, leave it to side. We at Motive Partners really follow the IOI model. That means investing, operating, and innovation. We believe all three things needs to come together to really make an impact and a change in the financial service world. From an investor point of view, what is better? The best thing is, the amateurs have left the stadium. So no generalist funds throw ridiculous money on the 50 buy now, pay later company, on the 25th ID company, or want to change the world with a neobank without business model. That's gone. There is no FOMO anymore in FinTech, the fear of missing out. We could not get into deals beginning of the year because term sheets were laid down, this was more 2021 I would say, term sheets were laid down within 2 days for first-time founders, for no further previous experience in FinTech, and non-proven business models. Big funds laid big term sheets quickly. So there was, I mean, you saw the most prominent example, I think, when you looked at what Sequoia wrote about the FTX investments. I think it was 180 million, and clearly they didn't do a due diligence. Otherwise they would have noticed that they even have no bookkeeping. So that is over. It's not so fortunate when you are a founder in Berlin Mitte and drinking your Club Mate and you know the only thing you can talk about is valuation, then it's a bad time for you. If you want to build a sustainable business and want to really work with investors who understand what you're actually doing and want them to back you long term, then it's a good time. It's also a good time when it comes to the operating side of things because a good amount of talent finally drops out of the unicorns because they realize that the time their VSOP and ESOP comes into money is not so relevant anymore. It's more relevant to have impact, it's more relevant to have control over the things you do and not work in a large organization where you're being a small wheel. So the amount of founder potential we see right now across Europe is unseen. One reason why I stopped being a company builder and became an investor is because company building is not competitive anymore. For a company builder, the clear advantage was we had money, we know how to operate, and we had fintech know-how. Now you find so much fintech know-how out there that we couldn't make a difference. You find still so much money out there, we can't make a difference. And that combination of talent with the combination of capital, long-lasting capital, I believe, is something which is really worthwhile. On the operating side as well, you have a complete different infrastructure you can work on today. I mean, we all dreamed the dream of contextual banking, embedded finance, banking at the point of interest, when we set up the Fintechs 5 to 7, 8 years ago. But now this dream becomes reality. The Fintechs we see today we are investing in, they work with 5 other Fintechs underneath them. They use Stripe for general payment routing, but Stripe cannot conquer the vertical, in our case, for example, health payment or automotive payment. The company we invested in, Nelly Solution, is using 5 different Fintechs. One for scoring, one for payment routing, one for fronting, one and more. One for ID identification, one for e-signatures. So the available technology, thanks to cloud, thanks to API, thanks to the fintech evolution we have seen, is really the next generation of fintech enablement. And these kind of fintechs will conquer real use cases. They don't need to learn about regulation because actually the provider does do it for them. They just need to bring the fintechs into context. You all heard this quote, every tech company will become a fintech. It's an, I think, 3 to 4 years old quote from Andreessen Horowitz. That quote only now becomes reality because now it's as seamless. And when it comes to innovating, well, we have seen 2,000 fintech startups last year. And it's sometimes hard to believe, to find, do you really are motivated to invest in the next thing because you think you have seen it all? What really helps me and my team to not stop innovating and not believe in the power of innovation is one easy example. Why does Zoom exist? Skype is 25 years old or 20 years old. If someone would come to you and pitch you Zoom 5 years or 6 years ago and would say, video call, that's the next big thing. Multi-billion-dollar business. No one would give them a check, or other than in the US. I mean, I wouldn't. But if you keep that in mind, sometimes it's just one feature, one technology component, one view, one go-to-market strategy, one name, one brand, can make a difference. It's obviously hard to pick then the right thing, but have a beginner's mind. Stay with the beginner's mind, stay innovative. As a founder, there's also a way to change. The difference, which is necessary in 2023, you have to have more proof points than before. PowerPoint fundraising is a little bit over. Fortunately for us, unfortunately for a few of you. But that time is over. But the good thing is you also have time. I remember when we set up Embedded Capital, the analyst I hired, she worked for another fund before, and he said, this company is 6 months old. It must be rubbish. Why? Yeah, because they don't have funding. In 6 months you don't have funding, you're rubbish. And this was the time we were living in. Because the funds were deploying so quickly, if you know what you wanted to do and you put fintech on top of it, people threw money on you. Today you need to have proof points. You need to have proof points on your go-to-market strategy, on your product, and so on. But it gives you back time. And again, in the combination with the right talent, time becomes per hour also more valuable because you have much more know-how than you used to have. So I'm actually pretty excited what lies from us. I actually believe it's an opportunity of a generation to be now in fintech. So everyone who works for a growth stage fintech, and we have a few in the portfolio as well, might not feel this yet. But if you come through 2023, and not all of them will, but a few will, and maybe more, then this is the true opportunity. Who's backing you in 2023 really believes in your business model. Everyone is on the focus on turning the business model profit. And one thing we should clearly criticize altogether on the investor market, now being part of it, it's easier to say so, the change for the companies came too quickly. The change was just too abrupt, from endless money to be profitable tomorrow. Profits or die trying, right? That is the philosophy a lot of people had to switch. And some businesses, and the good ones, they will achieve it. And they will get the backing. And then in 2024, when the markets will come back, when the not so good fintechs are gone, then the good ones will be really striving. And we have finally the chance to really build global champions. Something we had not the chance so far when the money is spread too far. And we need to double down on the global champion when it's for the growth companies. If you are an early stage founder or an early stage investor and you have a freshly raised fund, it's probably one of the best vintages ever, because now you can invest. Valuations come down, founders become reasonable, talent is available, and you can deploy the money in those companies with no stress, with conviction. And given the changed technology environment and landscape we have, you can build true European fintechs. There aren't really true European fintechs out there yet. Even if the number 26 or the Solaris Bank of this world have customers in all different regions, we need to have licenses in all these different regions, or branches, how they call them. This is then hard to have a 100% European platform. But because these type of platforms will solve the problem for you one day, you can actually build them. So what we also see is we finally see not only European fintechs, we see also global fintechs. Because they solve a certain level of complexity, the so-called middle layer, and then adapt to other infrastructure players and add by this a value. So this one API, one contract to global reach was a dream 5 years ago, becomes slightly reality in different aspects. In global payout solution, something we personally very, very interested. They still these MasterCard and Visas of this world, I hope no one is in the room today of them, still earn too much money when it comes to FX. And there's still no solution for marketplaces to pay out globally, especially in the distributed marketplaces we see. Something which is super exciting to have real European global businesses. And if you can back them, then obviously the size matters. So the discussion I heard between the US and Europe, completely right. Europe is fragmented, Germany is even worse, but that is a challenge, but this challenge we will overcome. And if we then build real European startups which can serve this complexity from one technology base, from one product offering, understanding the culture and the language differences and also the behavioral differences of each respected region, then we can build global champions. What we obviously need to make sure altogether is that it's then not giving only to the Americans or to the Asians. But ultimately, what we really need to make sure when we say US, Europe, Asia, it does not lead to anything. If the company is based in Berlin or Frankfurt or Paris, if the shareholding completely goes out Europe. If you look across the large scale-ups in FinTech in Europe, the shareholder base is very often not in Europe. And there, I think, when I look through all the corporates in the room, especially the insurance companies, I know maybe here's more bankers to take insurance companies, it's their responsibility to make sure they invest in European ecosystems. It's also the responsibility of the government to support the startups. And attention, I don't mean money. We don't need money from the state. We get money elsewhere. If they change the regulation when it comes how insurance companies actually can invest in funds, there's endless money in Germany. But someone just said it to me, Macron knows all unicorns in France. He knows the founders can call his office, and he takes care of it. Ask Christian Lindner how many fintechs he knows. And if you ask Christian Lindner to help you when BaFin goes crazy again, then if you say, I cannot influence, Wirecard and so my political career and so on. But that's a challenge, because every innovation has support in the beginning. I read an article the other day, the whole Silicon Valley is just fundamentally built up because of subsidy from the military. And the same to Israel and so on and so forth. In Germany, we cannot even deliver 18 tanks, but it's a different story. So we really need to make a change all together. The regulator, the corporates, the startup scene. We have the opportunity of a generation because there is enough technology, because there is enough talent, and there will also be enough capital. Maybe not always European capital, but there will clearly be enough capital available. And that's my message for today. We can do it, but we have to do it, and we need to be a little bit quicker. Thank you for listening, and enjoy the drinks.